Good morning, everybody. It's Friday, May 12th, 5:31 a.m. Central Time. Grain market's a little bit higher here. Mackenzie, good morning. Brian Split, good morning. You guys doing all right?
Morning, morning. Yep, doing great.
Yep.
Okay, we've got a big USDA report today. Why don't we start off with this?
Yes. So USDA will release its monthly crop production and WASDE report this morning at 11 a.m. Central Time. The report will include our first look at the new crop balance sheets for corn, soybeans, and wheat. Traders are expecting downward demand revisions on the U.S. old crop corn balance sheet.
All right, Brian, let's run through some of this. So, first off, these U.S. production numbers, I don't really think they mean a whole lot, but it's kind of a sentiment type thing. Like you see these big numbers that are likely to be printed on the balance sheets. It doesn't inspire any bullish attitudes necessarily.
No, long term, if these numbers came to fruition, they would be bearish and maintain the downward trend that we're in. But this is probably a report that we need to get through in order to feel like, all right, this is maybe our worst case scenario for a little while, and then hopefully put it past us, and then start to price in a little bit of yield risk and weather risk in the next 45 days or so.
Okay, so everything on this slide here, the projected yield numbers, production numbers, this stuff is all just it's a guess. Nobody knows what the weather's going to do. Nobody knows what the crop's going to do. We don't even know what the acreage numbers are. This next slide, this is old crop U.S. ending stocks. This stuff is real and tangible and material. I said earlier this week, and I think Matt was on, and I talked with him a little bit about this. The market's not trading a 1.36 billion bushel old crop corn carryout. I think we're trading like a 1.5. It's just a question of like when did they make the downward revisions for exports and maybe ethanol. Is that your thought, or do you think differently?
Yeah, I mean, I feel like there's kind of some mixed signals from the market right now. You've got a flat price that suggests maybe we're trading something bigger than that, 1.366. But then you also have the spread market with May, July spreads trading, 50 to 60 cents inverted as we're in delivery. And then you look at July SEP hitting a 75-cent inversion this week.
Yeah.
And that would suggest that things are tighter than a 1.5.
Yeah.
So.
Is this the market just trying to pry some corn from the farmers' hands? We saw ethanol production statistics have just not been that great the last couple of weeks. The only thing I can think of, I mean, it's not margins. Maybe they just are having trouble getting their hands on corn.
It's definitely a possibility, and that's going to be a conversation similar to crush, right? Where if crush numbers are disappointing, then that could allude to the demand side, and it could also allude to the idea that it's difficult for the crushers to get soybeans, and that could also be the case for corn for ethanol. But we know that the Western corn belt is definitely the region of the country that is going to maintain a tightness versus the Eastern belt, at least until we get a new crop. But again, it's still a drier bias out west right now, and we've got some healing to do out west for sure.
Here's the new crop estimates. Just thinking out loud here. So everybody thinks, not everybody, but I think the general consensus is that we're going to see a bearish looking corn report today, right? So when that bearish looking report inevitably is released, who's left to sell the thing? I mean, could you theoretically post a bottom on bearish news today? That happens sometimes.
That's what you're looking for. You're looking for either a report that comes out surprisingly friendly compared to the estimates, but maybe more likely is a report that is bearish and looks bearish, yet the market doesn't go down on that news, or goes down and finishes higher. And like I said, that maybe we just need to get through these numbers and see how bad the numbers look before we make a low. And if I'm a fund manager and I know, hey, I'm short right now, and I maybe don't want to be as short as I am going into late May and into June, a bearish report is a great time to be able to maybe do some buying and lift shorts, as the people that are trading the report itself, if it is bearish, they're going to be selling into that buying.
We're doing the best we can to be optimistic here, guys.
I'm trying.
Speaking of bad news, Mackenzie, export sales.
Yeah, weekly U.S. corn export sales decreased noticeably on the week. Net corn sales for the current marketing year totaled 257,300 metric tons. The print was down 24% for the week, but up 11% from the prior 4-week average. Accumulated corn sales for the current marketing year are down 34% versus the same period last year. Net soybean sales for the current marketing year totaled 62,200 metric tons. Those sales were were down a staggering 79% on the week and 68% from the prior 4-week average. Wheat sales hit a marketing year low of 26,300 metric tons. The print was down 88% from the previous week and 86% from the prior 4-week average.
This is an absolute dumpster fire across the board. I don't know how you paint this positively. USDA's got to come down with their corn export number. More people are talking as if they've got to come down with their soybean export number. That corn number, that 257, that was actually like above expectations. Brian, what do you think about exports in general, which have been poor?
The soybean number doesn't bother me as much. This is the time of year when it shouldn't be that good. We should be shifting from a bean program to a corn program. It's really the corn number that is extremely troublesome. And that was something that 4 months ago we were saying, all right, we're going to be going into that period where corn exports are going to start ramping up. And gosh, they did ever so slightly for a little bit. China came in and did some buying, and then they did some canceling. And it's just been an extremely mediocre export market for corn for the old crop. And our new crop book for both products doesn't look that exciting.
Okay, let's get to that. We had a flash sale yesterday.
Yes, USDA reported a flash sale of new crop U.S. soybeans to unknown destinations yesterday. U.S. exporters sold 132,000 metric tons, so 5 million bushels of soybeans to unknown destinations for delivery during the 23-24 marketing year. New crop soybean business has been slow to start versus the last 2 years.
All right, Brian, here's a statistic. Accumulated new crop soybean sales this year are down 83% versus the same period last year. Now, this is about the time of year we just start getting moving here, May into June. China has purchased, and this does not include this flash sale, but China has purchased less than 1 million metric tons of new crop beans on the books. Last year, they had more than 7 million booked at this point in time. It's not a death sentence because it's early, but it's not a good sign either.
Yeah, I mean, you think about a year ago, we were dealing with a drought in Brazil, and that affected soybean production pretty immensely. That kept our exports, and especially for the new crop book moving forward, looking very good. So new crop book this year after a big bean crop in Brazil, not good. But soy meal exports actually pretty fantastic. And so we are seeing the impact of that Argentina drought, all right, because Argentina, again, is a very big provider to the world market in soybeans. So that's maybe at least a small positive. But yeah, the new crop book in total is just not exciting.
There were some rumors floating around yesterday. I think this is why the bean market rallied at midday. There were some rumors floating around that there were some canceled meal purchases out of Argentina that were rebooked as U.S. purchases. So the cancellation thing can work for you both ways, guys. But that's like the least surprising news ever, that they're not going to have meal available, or maybe it's too expensive or whatever out of Argentina. But interesting enough. Let's get to this old grain deal story, which is such old news, but we've got to cover it.
Grain deal talks in Turkey were unsuccessful this week. The four-way talks involving Russia, Ukraine, Turkey, and the United Nations did not result in an extension of the Black Sea grain deal. The deal is set to expire next week. Additional talks are slated to take place online, according to AP reporting. Ukraine is pushing for a longer extension, while Russia opposes an indefinite expansion of the deal. A Russian official, however, indicated that Moscow is considering proposals made by the United Nations.
The Kremlin was out this morning with some comments. They said there's nothing new to report. They said that a potential call between Turkey's president Erdogan and Russia would not help. So I don't know. I mean, you got less than a week left on this thing. What do you make of it?
The tough thing about this is I don't know how much at this point the world needs Ukrainian exports with the South American crop that's come online. Maybe China doesn't need Russia to allow them to keep it open. I don't know. I feel like there was some pressure by China for over the last couple times it was expanded because they needed some of that corn out of Ukraine. Do they still need it? Can we get it elsewhere with this Safrinha crop coming online? And I don't. Maybe that has something to do with the negotiations. Maybe not.
There are bound to be some additional headlines in regard to this. I would imagine over the weekend, probably come Sunday. What's up next, boss?
So, Brazil's government increased estimates for the country's corn and soybean crops. CONAB, which is Brazil's USDA, released its monthly crop report yesterday. The country's soybean crop was pegged at 154.8 million metric tons versus 153.6 million metric tons previously. The corn crop was pegged at 125.5 million metric tons versus 124.8 million metric tons previously. If confirmed, the soybean crop would exceed the previous record by nearly 11%, and the corn estimate would eclipse the previous record by more than 8%.
Monster crops. Brian, did you notice that Brazil, in regard to soybean production, they just skipped over the 140s entirely? They went from 139.5 to 154 or whatever in 1 year, and they may not ever go back either. The expansion in production has been phenomenal, and these are monster crops, and this has absolutely hurt U.S. grain prices.
Yeah, I think about over a decade ago, maybe 14, 15 years ago when I started in the industry, and they're growing almost 100 million tons more soybeans in one production cycle than what they were when I started.
Yeah.
And that's pretty staggering, just the expansion of their production in land and the improvement in yield down there. Right, so we've lost market share.
The estimate for this coming fall is that Brazilian farmers will plant, I believe, just south of 112 million acres of beans, where we're going to do south of 90. So they are they're the big producer now, no doubt about it. We still got a drought.
Yeah, the drought is still hanging on. The government released updated drought monitor data yesterday. Drought remains pronounced across the U.S. plains and HRW wheat areas in particular. So if we look at the U.S. crop and livestock areas experiencing drought on a percentage level, 29% of corn country, 21% soybeans, winter wheat areas, 48%, spring wheat, 11%, and cattle country, 42% is dealing with drought.
Yeah, it's the same story. I mean, this is a multi-year drought. It is raining again this morning in some of these areas, which is not a bad deal. Brian, what are you hearing from farmers in general in these drought-stricken areas, whether it's winter wheat or corn planting prospects? I mean, maybe these rains have helped a little bit, but I don't know.
I think the general sentiment is it's extremely welcome. It's absolutely needed. But the recent rain really doesn't change the overall tune, and they're going to need to continue to get rain for the long-term healing to happen. Otherwise, it's kind of a Band-Aid on a larger situation.
All right, we'll say this again: inflation is over.
April wholesale inflation increased by the smallest amount in 2 years. On a yearly basis, April's producer price index increased 2.3%, the lowest level since January 21. This is a decrease from a 2.7% gain in March. On a month-to-month basis, the wholesale price index increased 0.2%. Data from the report shows inflation is coming down in a meaningful way. Initial weekly jobless claims were also reported yesterday and came in at 264,000. That was up 22,000. This was higher than expected and the highest level since October of 2021.
This is exactly what the Fed had wanted to do and is seeking to do with these rate hikes. They want 2% inflation, and they want you to lose your job. And it appears as if both are trending in that direction for the moment. So you got PPI down to 2.3. CPI, which tends to lag PPI, is now south of 5%. I think this is all bad for commodity markets, Brian. I don't think it inspires bullish attitudes.
Right. The interest rate environment does not bode well for commodities in general. And we talked about M2 money supply, for example, over the last couple months and the way that that's really contracted aggressively. So interest rates are doing their job. I know it's nice that inflation is not what it was, but it's still in a positive direction. And we're just not going back to where we were before all this happened.
Inflation and commodities are tied at the hip, guys. Maybe I'm guilty of a chart crime here, but commodities tend to lead kind of like the inflation. It's not the other way around. It's not like commodities fall, or maybe it is. I don't know. You could argue either way. You could argue that as inflation declines, it inspires negative sentiment in commodities and it kind of builds on itself. But at the same time, if commodity prices fall, inflation falls, but they are tied together. I mean, they moved hand in hand together through the latter part of 2020, through 21, through the first part of 22.
Correct. And general commodity values do comprise a big part of the indexes that we're going to be looking at for inflation. Now, there's obviously other things like the cost of housing and stuff that they look at for inflation, but commodity values are a big part of that.
I think energies, especially like gasoline prices, are a big deal. Like fuel oil is a big thing cited in the CPI report. Food is a little bit different because like food prices at the grocery store don't necessarily have a direct correlation to like corn prices on the board. Like corn prices on the board could drop $2, but you might not see anything drop at the grocery store. But interesting stuff that this inflation thing appears to be trending in the right direction. I know nobody wants to believe it because everybody I think a lot of people believe like, oh, for inflation to be over, we've got to go back to 2019 in terms of the way things are priced. And I don't know if that's going to happen. I really don't. Labor and wages are just too tight. Mackenzie, cattle were what, kind of mixed to lower yesterday?
Yeah, they were basically mixed. Feeder cattle definitely benefited from lower corn futures. They were on average 86 cents higher on the day, except for the May contract being down $1.25. Live cattle futures, they were mostly red across the board on Thursday, but there really weren't any big moves. Cash cattle trade has been mostly inactive this week. Not enough sales to set a trend. However, on Thursday, there were some early sales in Nebraska at 175 to 176 and at 176 to 177 in the Western Corn Belt. Choice box beef ended the day at 305.72. That was down $1.15. Select ended the day at 284.58. That was up 4 cents.
Brian, cattle market thoughts? Anything on the chart that interests you?
I like the way feeder cattle have traded. We've had this recent pullback. Most of the pullbacks we've seen in the last couple months have been around these banking issues.
Yeah.
And then once we kind of get that through the system, the cattle market seems to find support and then return to the uptrend. So I really like where feeder cattle have held their uptrends and have rallied off of that. And I think the feeder market's going to lead this higher if we're going to see new contract highs.
Outside markets this morning, guys. U.S. dollars about flat. Stock market's higher. The S&P's up 17. Dow Jones up 150. Gold's off $8. Crude oil up 31 cents at 71.19. Hey, guys, thanks for joining me early this morning. Everybody have a wonderful weekend. We will talk to you on Monday.